Okay, good afternoon, everyone. My name is David Wu, Chartered Professional Accountant, and today's video is on Principal Residence Exemption. Again, my name is David Wu. My background is real estate tax, retirement income planning, and financial risk management. Before I begin, I would like to talk about my Realtor Alliance program. So this is a service I provide to realtors and their clients. It's free tax consultation for realtors and their clients, and as well as free tax seminars for brokerages. So if you want to join this program, simply contact me or sending me an email at the email address that you see below on this slide, and I'll be happy to give you some additional details. So back to the topic, principal resident exemption. This is in Canada. This is one of the few things where you don't have to pay taxes on the appreciation is your principal home. So if you own a property that you ordinarily inhibit, you can designate that property as your principal resident, and any gains are 100% tax free. So I'm going to go through some of the different scenarios regarding the principal resident exemption. But the beauty of this is that no matter what the gain is on the property, you could potentially save a lot of tax by sheltering it by the principal resident exemption. Uh, if you are married, each couple, I should say, can only designate one home as your principal resident. So if you own multiple homes, you need to choose one that you inhibit normally to be your principal resident. The government does allow you to designate a cottage as your principal residence as well. Okay, so there's no guideline in terms of the minimum time that you need to live in the property. Okay, but as long as you're ordinary and go to the cottage, you live in it, you're not renting out your cottage, then you can claim that as your principal resident as well. Okay, so what if you're in a situation where you're renting out a portion of your home? You can still claim your principal resident exemption provided that the income producing use is a small portion or is not the main portion of your home. Okay, your main use is for your principal resident. Okay, so here's a situation where you're renting out the basement, for example, uh, and it's 40% of your size of your home. Then situations like that, you're still living in that home, you could still claim 100% of the gains tax free. Okay, you just want to make sure there's no structural change to the property that you did to modify the home, and you did not claim any capital cost allowance on the property. Building on vacant land. So if your intention was to buy, improve, and then sell for profit, the principal resident exemption will not apply. Okay? Even if you live in the property while making the improvement, because the intention is to make profit, so the principal resident exemption will not applies to situation where you buy, improve, and sell. Change of use rules. Okay, so you can experience a situation where you have a principal resident, but then you decide to move out and convert it to an income property. If that happens, there is a deemed disposition at fair market value at the time of the change in use. So because you can claim the principal resident exemption, you won't have any tax impact when you change the use. The fair market value will become the new cost base. So in the future, when you eventually sell the rental property, your gain will be calculated based on the fair market value at the time of the change of use versus the market value of when you actually sell the property in the future. Okay? You can rent out the property for 4 years and move back in and still maintain 100% principal resident exemption if you do not own another home, okay, during that time. So if you are just renting during that time, for example, or living with your family, a special election will be required. So CRA does allow you to take advantage and have a change of use, rent out for 4 years, move back in, and still maintain that those 4 years you can still shelter 100% as your principal resident exemption. What if you change an income property to your principal resident? In that case, there's also a deemed disposition. CRA is going to assume that you sold at that time at a fair market value. You can defer payment of taxes until the property is actually sold. Okay? So you don't need to pay the taxes right at that time. You can, wait till the time when the property is actually sold and file an election along with that, so that you can take advantage of that deferral. Fair market value becomes your new cost base for your principal resident. Okay, so in the future, you can claim your principal resident from the date of the change of use till the date that you actually sell, and then the capital gains associated with the change of use you will report at the time you actually sell property. A special election will need to be completed for that as well. Okay, with that said, that's all I want to talk to you about the principal resident exemption. Again, I have a program called the Realtor Alliance Program, offering free tax consultation for realtors and their clients, as well as free tax seminars for real estate brokerages. Please send me an email to get more details and to get started in my Realtor Alliance program. Thank you very much, and I hope everyone has a wonderful rest of the day. And I'll talk to you and see you next time on my next video.